Hi, this is Mike Palmer with Group 1 Trading, and this is the Institute Volatility Sonar Report. Everybody is talking about the Brexit. They vote today. We're going to hear results overnight, right around 1 a.m. Chicago time. We should have the official result of the Brexit vote. Right now, polls are saying that Remain is a strong leader for this thing, and that's why we've seen volatilities pull back quite a bit since polls really started turning in Remain's way. However, yesterday, when it still seemed like there's perhaps a coin flip possibility of this election going on in Britain, we saw what we would call a short squeeze in volatility. We saw front month volatilities, weekly volatilities, you name it, really rise a lot, and that's volatilities in the VIX options themselves, while the index, the S&P 500, was not moving. Now, it's a really interesting thing for the VIX, because usually we see this environment where market goes down, VIX goes up, and it works as an inverse product to the market. But that's not exactly how the VIX is intended. The VIX is a calculation off the S&P 500 options. When you run into these coin flip scenarios where there's a good outcome and a bad outcome, you're going to see volatilities rise in the S&P 500 without the index necessarily moving, and that's going to make the VIX move up. So yesterday we had the VIX up $2.50, and the index was only down 2 points. So it's a very big lesson in what it means to have volatility. It's not just an inverse of the S&P 500. It is a forward-looking 30-day volatility, and that is really what was going on there. People were scared about this Brexit vote and what could be happening there. Now, as far as the trading goes today, the last polls going into this vote today looks very much like Remain is going to win. And as a result, we came in this morning with the S&P 500 up 21 points. We saw volatilities pull back over $2, trading right around 18. And in that front weekly, the June 29th weekly options class that has been so active, that straddles down to about $3. Still expensive for the 17 straddle. However, that is definitely a lot less volatility than we were seeing just a week ago. Some big trades that we see, especially in these volatility pullbacks, is people selling downside puts. Basically, the VIX index comes down, and they sell those VIX downside puts, basically to say, we think the volatility of volatility itself is going to come in some. We don't see the VIX moving very much. And the big trade today we saw was a seller of the July 16 puts. They sold them at 101 versus 1835 in the July future. Very indicative of what you see when you have these big volatility pullbacks like we saw this morning. However, everybody's looking at this Brexit vote at 1 a.m. tomorrow. It's going to be a really telling moment for the markets, and I certainly expect a lot of activity in both VIX weeklies and the regular July class. This is Mike Palmer with Group 1 Trading, and this is the Institute Volatility Sonar Report.